we'll wait for the trades to settle down and use that time to discuss the IPO market, to discuss the fundraising. In 2024, actually, Indian companies raised a whopping 3.5 lakh crore rupees across 438 issuances. Bhavesh Shah, the Managing Director and Head of Investment Banking at Equirus Capital, joins us to give us an idea whether the IPO frenzy continues. Well, Bhavesh, good morning. Thank you very much for joining us. A very happy new year to you. And tell us if the happiness continues for the IPO market in 25 as well.
Good morning, Latha, and wish you all a very, very happy new year.
Thank you.
I think this year of 2024 has been exemplary for capital raising. I think because of 2-3 factors. I think the markets, of course, have been buoyant, but I think it's because of the domestic liquidity which has been coming in. We had situations where we were always dependent upon FIIs, but the last 2 years we have seen domestic inflows, coming in, and we're no longer dependent upon the FII inflows for the issues to happen, which used to be very cyclical. So we would have IPOs happening maybe 1 year in a 3-year time frame, but now we might have see more consistent IPOs happening going forward. So I think overall, I'm very positive about the coming year. I expect the flows to continue, and I'm looking at even on the supply side, the companies which are now coming are fantastic businesses, fantastic promoters, good business models, and they will want to raise capital, and there will be investors who will be wanting to invest capital. So I expect this trend to continue. Obviously, there will be risks involved, but otherwise, I think that the way we're looking at it right now, the trend seems to be very positive for this year as well.
In the previous cycles, we used to always say that when IPOs start listing at a discount, that clearly means companies have gotten greedy and the IPO frenzy has brimmed over. Now we are not seeing that. Actually, we're seeing most of the IPOs make money even on listing day, even the ones that listed this week. So do you think, therefore, just the change of the calendar doesn't mean the IPO season is over, because companies seem to be behaving responsibly?
Absolutely right, Latha, and so that's a great observation. Why I think, what's happening here right now is the domestic institutions who are becoming more and more flush with funds, they are incorporating more and more stricter processes for their investment decisions. Gone are the days where you can actually call a fund manager and you can the fund manager himself takes a call to put in the money in an IPO. But now there's a process where the analyst gets involved, the consultant gets involved, the director gets involved, the IC gets involved, the fund manager gets involved, and it's a joint decision, because now the mutual fund industry, for example, is managing more and more money. So I think with that, the amount of diligence the institutional investors are doing on each and every IPO, A, to select which IPO to invest in, and B, the pricing. The pricing discipline is fantastic. I think I must compliment the mutual fund industries for that. And I think the promoters also, on the other hand, are realizing that IPO is not an event which has to be milked for getting all the valuations upfront. Their promoters are now viewing this opportunity or an event of an IPO as a stepping stone for value creation in a long-term journey, and it's just a milestone in the company's IPO, in the company's lifetime. I think a combination of all these factors have resulted in people or the investors making money, and which is in fact one of the major reasons I also believe that it lends credence to the optimism that I have in the coming year as well. At the moment these investors become reckless and their returns start falling, that is the start of the fall of the market.
Bhavesh, hi, morning. Reema here. So tell us, how are FIIs approaching when you go to them with a primary issuance or IPO as anchor investors? Because the FIIs have largely shunned the secondary market, buying in the cash market. So when you go to them, with the prospective IPOs as anchor investors, are they interested in it? Have they been? So of the inflows, what percentage of it, for instance, has come in from FPIs?
Hi, Reema. I think, what's happening is As I was saying earlier, the FII money continues to be cyclical in India. They are there for a few months, they are not there for a few months. And depending upon their investment, sentiment, whether they're investing in India or not, their appearance comes up in the IPO. But what we are now seeing is the domestic inflows are becoming more and more stronger and stabler for an IPO to happen. We used to have a situation many years ago where the domestic investors will look up to the FIIs and set the price, and they will kind of dictate whether the IPO is happening or not. Today we are having a situation that FIIs are looking up to domestic, whether they are investing, what is the price they're investing, and then we'll be the followers. And that's the general trend we are now seeing. I'm not saying that happens every time, but compared to what we used to see earlier, we are now seeing more domestic. So it's kind of a, if I may use the word, nationalization of investments that is happening now in India, which is, the dependence on foreign investors is going down.
Okay, yeah. What are the big ones we should look forward to? I remember LG, right? LG is going to come, and HDB Financial. Any other marquee IPOs we should look forward to?
No, I think quite a few, Latha. My view is, I think a big chunk of, the internet companies which have raised a lot of private equity and will look to exit. Not a lot of them will have to, make sure that their business model pivots into something which is more profitable and growing. But a good chunk of IPOs in the coming year will be coming from these new age companies. B, I think manufacturing is another big area where I believe that there could be a lot of fundraising coming in, and consumer and healthcare will be another area that is where we see a lot of fundraising happening without getting into specific names.
Okay. One of the complaints of the IPO season that's just gone by and which is underway is that most of it is, for PE funds and promoters to cash out. We haven't seen too many. I mean, there have been exceptions. Even this week, there was an exception of people raising money for expansion. Would you see that as a negative?
I think most of the businesses, the way I think about this is, if a business needs a lot of capital, which is always dependent upon external investors, it's obviously a cash-hungry business. There used to be a time when there was a lot of preference for primary issuances and not for secondary issuances or offer for sales. But I think the investors are starting to think that if the businesses are cash-hungry businesses, they are not necessarily generating profits or not generating cash flows. So rather to invest in a company which is doing an OFS, which is a cash-generating business, rather than investing in a company which is only kind of taking up cash. But I see the question that you have is more around the expansion and the project expansion that we would have. I think we are expecting more and more of the fundraisers to happen going forward, which will be for expansion, more around the manufacturing space. Most of the other businesses and the financials, of course, there'll be a lot of primary issuances around that. Most of the other businesses, we are looking at companies who are absolutely fantastic businesses, throwing cash, generating profits. They don't need to really need to raise capital. And if they're doing an IPO more for, for other reasons which are beneficial from a strategic standpoint from the company, I think, investors love lapping up them too.
Yep. No, I'm sorry, we are getting close to the market opening time. Bhavesh, it's a pleasure having you with us. Thank you very much. And for all the key takeaways from the conversation, the IPO boom is likely to continue.